we're going to walk through exercise 310. You might want to print it out so you can see it a little bit better. But anyway, what we're going to do is we're going to prepare the journal entries, then we're going to post the entries to the appropriate ledger accounts, and then we're going to prepare a trial balance. Okay, so I'm going to focus mainly on the journal entries, and then I'll talk a little bit about the other ones, but I'm going to pause it while I try to make this a little bigger. Okay, so before I do that, I would encourage you to write out the T accounts so you know the debit and the credit rules. Until you get used to them, I would suggest that you write them out on a piece of paper so you have them in front of you. But basically we have the accounting equation is assets equals liabilities plus owner's equity. So here's my accounting equation up here. Assets are increased on the debit side. Liabilities and owner's equity are increased on the credit side. I've got the yellow highlights for the side that's credit. Revenues are highlighted on the credit side, or increased on the credit side. Expenses and dividends are increased on the debit side. So if you recall, the more revenues I have, the more owner's equity I have. So this is kind of important that the yellow side is the positive side. So the more revenues I have, the more owner's equity I have. The more expenses I have, the more owner's equity goes down. So in this case, this is my decrease side. Okay, so let me pause and put my increase decrease. Okay, so the more revenues I have, the more owner's equity goes up. The more expenses I have, the more owner's equity goes down. The more dividends I have, the more owner's equity goes down, because the owner does not have an ownership in the business anymore. They've taken it out of the business and put it in their own personal account. So remember the separate entity concept, where the business is separate from its owner. So if the owner takes out a dividend, the owner has it in their own personal account, not in the ownership of the business. So I'm going to go through these. A couple things that you need to know. Debits always come first. You will have a debit column and a credit column, so I will highlight my debit column here in gray. So those are my debits. This column H are my credits. Debits always come first. Credits are generally indented, although I think on your online homework they don't have you indent them, but credits are generally indented. And notice down here, if you have more than one credit, or I don't think I have any more than one debit, but again, all debits come first. So don't just do debit, office equipment, credit accounts payable, do a debit, then a credit, and a debit and a credit. You always put all your debits first. So a lot of times you leave a blank space and put your credit if you can figure out your credit first. All right, so the first one, I issued capital stock in exchange for cash. So I'm going to ask myself, what did I get? I got cash. A lot of times in a problem, if you look for the cash and you get the cash side of it, the rest of it can become a little easier. So I got cash. Cash is an asset. Asset went up, so I debit cash. How did I get cash? I got it for capital stock. Capital stock is an owner's equity account, and it's going up. So now my owner has $950,000 holdings in the business, and the business has cash. So in other words, it's sort of like an indirect ownership. I own the business, and the business owns the cash. Next one, I paid office rent expense with $1,800. Again, look for the cash. The cash is going down, so I credit cash. So I'm going to skip a line and credit cash. Why did I pay cash? I paid cash for rent expense. Expenses are costs of doing business. So revenues right here are what we're in business for. And expenses are our costs of doing business. Okay, so anyway, this one is expense. I have rent, which is a cost of doing business. Expenses are debits, so I debit rent expense. Third one, I purchase office supplies for $600 cash. The supplies will last for several months. So let's look for cash first. Cash, I purchased them, so cash is going down, so I leave a space and I credit cash. Okay, so I'm going to put in a credit column for cash. And what did I get? I got office supplies. Sometimes you'll think, well, that's a cost of doing business. I debit office supplies expense. However, the supplies will last for several months, So I put them into an asset account called office supplies, and as I use them up, I'll take them out of office supplies and put them into office supplies expense. But for now, before they're used up, I put them into an asset called office supplies. Purchased office equipment for $12,000 on account. Whenever you see the word account, it's going to either be accounts receivable or accounts payable. So in this case, I purchased them, so I'm going to pay it. The entire amount is due June 15th. So if you look through this, you're going to look for the cash, and you're going to notice, oh, I didn't pay cash. I'm going to pay cash later. And the emphasis is on pay it later. So I'm going to have an accounts payable, which is a liability. So I'm going to credit accounts payable. And what did I get? I got office equipment, which is an asset, so I debit my assets. Next one, purchased a company car for $45,000. What I get? I got a car. A car is an asset, so I debit vehicles or car. A lot of times these account names are whatever you make them. In this particular problem, they gave us a list of account names to use. Generally in a business, you would go look at their account titles and use what they have. So we would use vehicles since they don't have car. I paid $1,500 in cash, so cash is going down, so I credit cash. And I issued a notes payable for the remaining balance. A payable is a liability because I owe it, and my running total of how much I owe people is going up, so I credit account or notes payable. Okay, the difference between an accounts payable and a notes payable, a note is you sign it, and it's generally more formal. It's generally with a bank. Where an accounts payable is just when I buy inventory or something repetitively from a creditor who I've set up an account with. Thus the name accounts payable. So if we were Quincy University, I might have an account for paper with a company. I might have an account for uniforms with a company, etc. So they have checked out my credit, and they have verified that I'm a customer who will pay, and they've set up an account so I can call an order. Billed clients, $120,000 on account. So I look for the cash. I don't have any cash because I billed them on account, so I'm going to receive the money later. So this is an account, but in this case it's a receivable. A receivable is an asset. If I want the definition of an asset is anything of current or future benefit. So the current or future benefit here would be a future benefit. I'm going to get cash later. So I have my assets are going up. It's not cash, but it's a promise to receive cash later. So I debit accounts receivable. Why did I get that? I got it from clients, and what's what I'm in business for. And so it's a revenue, so my revenues are going up. So I have accounts receivable, client revenue for the $120,000. Declared an $8,000 dividend. The amount will be distributed to shareholders on June 26th. This is only May 26th, so I'm not paying it till later. Whenever I say I pay it later, it's a payable. So I'm going to credit dividends payable. If you look at the list of the accounts, some of you will want to credit accounts payable. Generally, I have accounts with companies that I order from. I don't have accounts with my shareholders. So whenever you don't have an account with them, you credit payable and whatever in the heck payable it is before. So it might be interest payable, taxes payable, etc. Those things you don't have repetitive purchases from. And so accounts payable are for repetitive purchases from a certain company, like for paper or uniforms, gasoline, if you had that, we're a trucking company, etc. But anyway, so I declared the dividends, so I'm debiting dividends, so my running total of dividends is going up. Notice this is the owner is taking money out of the business, so owner's equity is going down, and my dividends, I'm keeping track of them on the debit side. I would credit cash if I was paying them now, but I'm not paying them till later. Paid utilities of $500, so again, look for the cash. I paid them, so cash is going down, so I credit cash. What did I pay? I paid utilities. Utilities are a cost of being business, so it's an expense. Next one, I received $9,000 from clients billed on May 20th, so notice I billed them on May 20th. So whenever I see that, I want to go back and look at my May 20th entry, and you can see that I set up an accounts receivable from this. Now I'm collecting on that accounts receivable, so I take it out of accounts receivable. Okay, so it looks like this one is actually missing. Oh, it shows accounts receivable up here. I'm not really sure why it's not. Okay, I got the receivable to show. So I received the $90,000 from clients billed on May 20th, so I take it out of accounts receivable because I no longer am going to receive the money because I got it. So I debit cash. So again, if you looked for cash first, that might be helpful. Cash is going up. Why is it going up? Because I collected on this accounts receivable. Don't credit client revenue again because I would be double counting. So I already put the $120,000 in a client revenue. So if I put it again, it would look like I've got client revenue of $240,000. So I need to take it out of accounts receivable. So pay attention to these dates. I recorded and paid salaries expense of $32,000. I paid it, so cash is going down, so I credit cash. Why is it going down? Because I paid salaries. Salaries is the cost of doing business, so I debit the expense. Okay. My next one, I believe in this one, I'm going to post them to the T accounts and then prepare a trial balance. Okay, so let's go to that page there. Notice if I had a beginning balance in cash, I would put that beginning balance on the normal account side. You can have, let me go back here, you can have a credit balance in cash, but that means it's a cash overdraft. And so generally speaking, your beginning balance will always be the plus side. Okay, because that's the normal balance. So are there rare instances where you can have a negative balance in an asset? Sure. A cash overdraft would be an example. If I overpaid, let's say I paid off an accounts payable and I paid too much on it, that I would have a debit balance. But this is Principles of Accounting, Chapter 2. For our purposes, we will always have, and at the end, these are the normal balances in the account. So what I want you to look at it is what happens is I need to do a financial statement. So I need to have a means to accumulate how much I do have in cash, how much I do have in capital stock. And so back before computers, we basically had a page for each account. So I'd have cash and I'd have a page. And I would have it in a 3-ring binder because I might need to add pages. So as you can probably guess, cash might typically have, hundreds of pages in back of cash. So I wouldn't know how much I'd have to add and I'd keep a running total. So if you think of your checkbook, your checkbook is basically a ledger where I keep track of how much cash. But if I wanted to, at the same time, keep track of how much I spend on groceries, how much I spend on college costs, etc., I would need a separate page that looks like my cash account, except it would be for groceries, etc., because I pay for cash for many things: tuition, groceries, clothes, etc. So a business simply keeps track of everything, so they have a separate account for them, and then I need to accumulate them. So notice I debited cash for $950, I credited cash for $1,800, I credited cash for $600, I credited cash for $15,000, etc. So as I go down these, I'm going to put them in the right pages, etc., to keep track of how much I have as I go along. So if you look at cash on May 3rd, $950, credit $1,800, credit $600. So I'm going to go back there. So I got $950,000, $1,800, and $600. So $950,000, $1,800, $950,000, $1,800, and $600. So I'm just writing them down either on the debit side or the credit side, okay, as I go along. So all I've done is post these accounts. So 1, 2, 3, 4, 5, 6, 7 cash accounts. So let's go through here. 1, 2, 3, 4, 5, 6, 7. So those are my cash entries. And I do the same thing for all these other ones. So notice this accounts receivable has $120,000 in that journal entry, and right there it's $120,000, and this is the $90,000 that I collected right here is 90,000. Okay, so these are just ways to figure out what do I have in each account. So again, back when I did it by hand, every time I made a journal entry, I would have to go find the cash page and post it in it, and I would have to go find the capital stock page and post it in it. We don't spend a whole lot of time on this anymore because this is the thinking part where I have to decide where to put it at. Not that these are that difficult, but they do get difficult in future courses, etc., and in businesses, and you have to kind of learn the basics. But this part, the posting, is done by a computer. So if you would picture yourself going into Quincy University and paying off your account, you would assume that Quincy University has some way to identify how much you owe on your specific bill and make sure your payment gets applied to your bill. And that's just what this is. Just like your amount due for tuition to Quincy University is on your bill, I want to keep track of the amount of cash. All right, so I post everything in these, again, mostly done by computer, and then I balance them. So all I do is add up my debits, add up my credits, and put it on the side with the most. And a majority of the time, it's going to end up with assets a debit, liabilities, owner's equity of credit, revenues a credit, expenses and dividends are a debit. Okay, some people actually like to subtotal twice, like add up their debits, put a subtotal, add up their credits, put a subtotal, draw another line, and then put them on the side with the higher balance. It's up to you. Sometimes if they have a whole lot of them, I do a debit subtotal, a credit subtotal, draw another line, and net the two. Okay, but you can see all of these. And then what I do is a trial balance. A trial balance just simply lists all of the accounts. So I'm going to put cash, 99,100. Accounts receivable, debit of 30,000, etc. So I'm going to show you that. So I got cash of debit of 190,100, accounts receivable 30,000, and I simply list all of these balances. So let's pick another one. Rent expense of debit of 1,800, rent expense, debit of 1,800, and list the balances. If I'm right, my debits will equal my credits because debits have to equal your credits all the way through here. So therefore, when I put on the balances, my debits will equal the credits. Again, now this is usually done by a computer, and you just print this off, and I will use this trial balance to prepare my financial statements from. But this is incredibly important. Just a couple of quick things. If you don't balance, which if you do balance, that's great. If you don't balance, join the club of almost every accountant in the world, including me, who generally doesn't get it to balance the first time because in this particular process, I post something on the wrong side, getting in a hurry. I put it on the debit side, or I put the credit for cash in the debit to accounts receivable, etc., etc. So it's very error prone, and thank goodness we don't spend a lot of time on posting and adding up anymore. But if you are wrong, first thing you need to do is get the difference and divide it by 2. I don't know if this will do this, but if I put 12,400 on this side and not on this side, notice that my difference is 22,400 because this side is 12,400 too high and this side is 12,400 too low. So if I take that amount and I divide it by 2 and I start looking for the 12,400, I can see, there's my problem. Maybe I put that on the wrong side. Sometimes it's these actual accounts here that I put on the wrong side, so I might look for a 12,400 over here. Notice if I put this 600 on the wrong side, it's not going to pop out on the trial balance. Another thing that is a common mistake is dropping a 0. So if I have an amount that's divisible by 10, you can see that if I might have possibly dropped a 0. So kind of look for dropping a 0. Another thing that might happen is if you have, let's see, 14,200. If this difference is divisible by 9, It can be a transposition, so look for, did I put 14,200? I'm going to go back here. You know, I've got 12,400 and I put 14,200. So look for that type of thing. So that's just an easy way to try to find it. For the most part, you'll have time to hunt these out, or if I do put a trial balance on an exam or something, it will be pretty short that you can correct your errors, like 5 or 6 transactions or 5 or 6 accounts, etc. So you can kind of go back and check your errors pretty quickly. So again, I hope that helps. Practice these. I can't overemphasize the importance of practice.